All right, back in business here tonight. Hope you guys had a fantastic day out there. Hope you enjoyed the summertime weekend. Only a couple weekends left here in the summertime season, but it's back to work tonight. It's Monday evening. We're the only people on the planet, I think, that look forward to a Monday morning, aren't we? Monday evening, though, at this point now, August 23rd, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. And if you're watching for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trade setups for tomorrow. That's Tuesday's trading session. Got a great video in store for you guys tonight. Lots of good trades setting up for our favorite markets. S&P's here, Nasdaq's here, gold is here. Glad to see you are here right along with us. Boy, had some big runs in the markets today. I mean, you could have woken up this morning and got into one of these markets and pretty much stayed long the entire day. Had some big bull runs on the chart today. Get some ranges on the charts for tomorrow. Ranges are always one of my favorite market conditions to trade, so we got a lot of great trades on our radar. By the end of this video tonight, you'll know my favorite trades for tomorrow. You'll also know some stuff to avoid to keep yourself in the green tomorrow morning, whether you're trading on your own or if you're trading with us tomorrow in our trade room bright and early. And of course, before we jump into the video tonight, though, as always, I want to make sure to remind you, make sure you subscribe to our YouTube channel. I post my best trade ideas every evening on this YouTube channel. Make sure you subscribe that we don't miss tomorrow night's video newsletter. Also, if you guys have any questions, don't be afraid to drop those questions in the comment section. I would love to answer any questions that you might have along the way. And if you tune in every evening, if you enjoy this video as much as I enjoy making it for you guys, hit that like button, that thumbs up for me. Really appreciate you guys carving out some time every evening here and supporting this YouTube channel. But make sure you subscribe. I don't want you to miss tomorrow night and the rest of the video newsletters here this last full week of the month of August. Can't believe we're looking at the month of September next week. But let's go look at the charts. Get this intro out of the way here. Time is ticking. Tuesday is right around the corner here. What's going on? Like I said earlier, you literally could have rolled out of bed this morning, got long on any one of these markets, and you would have been just fine here today. Definitely felt like a summertime market, right? Obviously every day is different, but summertime markets have these, a little bit lower volume. The markets tend to move a little bit more. They're a little more jumpy, and we definitely saw these markets jump here today. So we're definitely bullish across the board. You'll notice we have pretty much ranges pretty much across the board. Maybe a spike in channel there on the Nasdaq. If we're lucky, it'll be a spike in channel. We'll talk about that in a moment. But as you can see, right, we get some ranges on the Nasdaq, ranges on the gold right now. The plan for a range-bound market with this much bullish strength is pretty darn easy. We'd like to buy some pullbacks, right, across the board on these. Gold, of course, already got their pullback already. Once we get those pullbacks, then we start watching the rotation, right? The pendulum swing rotation. You can see gold, of course, already has that on its radar. Now, those pendulum swings could also eventually lead to reversals here later in the session tomorrow. So we definitely do have the sell side on our radar for tomorrow. But with this much strength in one direction today, you really want to be focused on the buy side until we see signs of exhaustion or reversal. So a lot of great buy setups. Definitely have some short side trades to keep an eye out for tomorrow. But again, we got to be careful with this much strength moving here for today. Now, before we jump into these charts and put together all the price action setups on my radar for tomorrow, let's make sure we're all on the same page. Tomorrow, of course, is a Tuesday trading session. It is not the end of the month yet, right? This Friday is the 27th. We do have, I believe, Tuesday next week is the absolute end of the month. And then, of course, we go into a holiday weekend next weekend. So we are probably not going to get a full dose of the end of month volatility, but hopefully we start feeling some of that end of month volatility and, more importantly, some of the back to school mentality that comes to the market. Remember, these markets have been relatively low volume, right, since pretty much the 4th of July, the Independence Day holiday. We're right around the corner here ahead of that fall time season. So hopefully we'll start seeing some more volume in the pre-market. We'll start seeing some more consistency along the way here. here. To be honest with you, it's been a pretty darn good summer so far, so I wouldn't wish to see that big of a change this fall. We've had a fantastic month of August so far in our trade room. We hope you have as well. So we do anticipate a little bit of an uptick in volatility as we get later on in the week. Hopefully that Jackson Hole Symposium won't knock down that volatility too much as we go into the end of the week. So be aware of that as we get later on in the week. That end of week, end of month volatility is expected to increase. We don't have a lot of news tomorrow. New home sales, of course, is probably the big headline number on that. It will be interesting to see if the new home sales number keep up with the existing home sales numbers. We saw, again, pretty strong existing numbers today. We'll see if that continues here tomorrow at 10 o'clock Eastern time. Everyone's expecting big numbers out of the housing market right now just because of the whole, remodeling and relocation. Everyone's been uprooted with this, lockdown and pandemic. So really the only numbers that are probably going to really move the market tomorrow at that 10 o'clock news will be a drastic miss to the downside. I don't think anybody will be surprised if we keep beating these numbers to the upside. But if we can get a big miss tomorrow to the downside, right? Couple tens of thousands underneath where they were expecting, that'll probably be the biggest reactionary event that we get. So we'll see what we get tomorrow out of that 10 o'clock news. That, of course, is the big news of the day tomorrow. But stay tuned, though. We get some more big news over this week. Durable goods on Wednesday, GDP on Thursday, and, of course, personal income, that inflation number ahead of that Jerome Powell, my boy, speaking at 10 o'clock on Friday. So the big news, the end of the week, we definitely have a lot to look forward to as we go later on in the week. Hopefully we'll see some good reaction to that new home sales number tomorrow at 10 o'clock. Now, don't forget, tomorrow morning and every morning, 8 o'clock Eastern time, we're going to get together, prep the charts again, and trade this stuff together. I would love to have you there trading right along with me in the trade room tomorrow morning. We open up at 8 o'clock. I'll put the membership invite at the bottom of the page here. I'll put it right below this video on the website, or I'll put a link in the description of the YouTube video. So make sure you grab that, get registered, and I'll see you tomorrow morning at the opening bell. Hopefully tomorrow goes as well as it did today. Let's get back to our charts here. S&P's ready. Nasdaq's ready. Gold is ready. A lot of these are going to be very similar plans for tomorrow. Really right now, everything is pretty bullish. Everything is into a trading range. When I think of a bull market into a trading range, there are really two basic, scenarios that I always kind of keep on my radar. One of them is to buy underneath the range. And what you want to do is you want to find levels of support, basically, like prior swings. Sometimes we get expanding triangles down here, right? You'll see a couple of those tonight on this video. But if we have a bull market into a trading range, you want to find some levels of support below it. And then, of course, I like to combine those levels of support with what I call failure setups. Now, we'll talk more about these failure setups, these price action setups here as we go deeper into these videos, right? But think about trapping in those bears, right, as they try to run below this low. That's where you want to be thinking about the long side trades underneath the range. And then the exciting part is if we can get a strong run higher, I can then go out and grab a new channel. I can mark up the high, I can mark up the low, and I can now look to buy that first pullback off of that low. And what's really fun about ranges is you can take the amount we went below, you can project that above the highs, and that becomes another kind of target right on the other side. So these are kind of the two main components. And then if we get really lucky tomorrow, like we saw today on the gold, right, on the S&P, if we really get lucky, the market will keep on running higher, and you can start to look for trap entries up here, right, and keep on piling on as we go. Let me get that off the screen there. So those are those kind of the three main components there. I didn't mean to get myself off track on that, right? But strong move up into a trading range, right? Find that failure below, right? Find that failure below. Grab that channel, right, as we're going, and then watch that blast. If it really starts to blast and runs through that pendulum swing, that's when you start looking for those traps, right, as we go here, right? So failure, pullback, trap. Those are kind of again, one would be buying underneath the range. The other is trading that momentum, right? That strong run going higher with that trap going high. Get some nice big juicy targets there up overhead. So I'm going to be kind of referencing this quite a bit throughout the video here tonight. So that's a lot of kind of the nuts and bolts be using here, hopefully quite a bit tomorrow morning in our trade room. Let's start first with the S&P 500, and we'll go right on through the list here tonight. Of course, don't forget, I'm going to put chapters at the bottom of this video, so don't be afraid to grab those chapters. I know a lot of you guys will watch this video all the way through, and then tomorrow come back and use those chapters to kind of pick and choose which markets you go back, whatever ones you're trading most tomorrow morning. Again, we know the market's bullish right now. You do not need me to tell you that. You can see that trading range is pretty well defined, right? As we go sideways here, I've got this, strong spike up, this big second leg, and then looking at that next objective up there at that pendulum swing. The S&P definitely has some good stuff waiting overhead. You got that round number, that 45.06 3/4. That definitely is a very likely target if these buyers continue this party running higher. So we'll definitely keep that on our radar tomorrow as well. Now, as you can see, I found some levels of support underneath that trading range. I've got this kind of trend line coming down overhead. I'll get rid of that just temporarily to kind of illustrate this. So how do we buy this, right? How do we sell it? What's the best way to trade reversals on these things for tomorrow? As you can see right now, I'd love to get down inside the buy zone, right? Get into these areas of support, trap in these bears as they try to get short off the moving average. Look for that move up, grab that pullback, right, as we go, and then blast, right? And that blast going higher, I then look for that shallow pullback, that higher high in price, right? And that trap as we go higher, right? You're going to see where that measured move will come in, round number target comes in. This is a failure setup. This is a pullback setup. This is a trap setup. Now, I don't use any indicators for this besides the moving average, right? The only two indicators you need to trade this price action strategy is the ATR and the moving average. Now, of course, these are just three of my favorite failures, pullbacks, and traps. If you're watching for the first time right now, I'm going to be talking a lot about price action setups, and I'm not going to go over all the rules of the entries, but I do cover all the rules and literally hundreds of examples of how we apply those setups in our favorite markets in our trade room. I cover all that stuff in our quick start class. I'll put a little link up there for you in the upper right hand corner. If you haven't done so yet, grab that quick start course, because that quick start course, it's a little shortcut class. Talk about the time frames to use, how to find levels of support and resistance that you can actually trade off of, and of course, most importantly, how to time the entries properly without indicators, right, with price action only. You're going to love that quick start class in the upper right hand corner. Now, one thing to keep in mind, what if we were to really drop off the high, right? Because this might happen, big move up today, who knows, right? Maybe the market spooked overnight, a lot going on right now in Afghanistan, the Delta variant, there's a lot of stuff going on right now. So what if the market was to really collapse overnight? At what point do we sell this market? Well, here's the thing. If we really see it shoot lower overnight, I still want to be a buyer on this because we had all of this momentum going higher. In that case, though, what you want to do is let the bears try twice, right? Instead of simply buying the stops, like I mentioned earlier, I'll let the bears try once, let the bears try twice, and then once we have those kind of bears in committed, now we know where their stops are, right? And we're pretty much doing the exact same thing, right? Now we look to buy into those stops, right? For a failure, price runs higher. I'm grabbing that new channel and hopefully getting that rip off the channel. And if we do, that trap, right, as we go higher, right? Makes sense? So just be aware of that. If it really drops off this high, really sharply pulls back, give them two tries now, respect that momentum. And then at what point do we turn bearish, right? At what point can we sell it? We can sell it once those bears hold that pullback. So if they pull back on strength, then the bears have to show us they want this. Because, I mean, look at this chart, right? Are you telling me buyers aren't going to love that pullback, right? Of course they are. They're going to love that pullback, especially in these markets right now where the stimulus is flowing, right? It's summertime trading. While the cat's away, the mice will play, right? So I would imagine a deep pullback will still get bought up. I do have to wait for those bears to come in a few times. But if we do hold that pullback, though, if they do hold that pullback, and if they can jump off no, I'm not talking about them like that. Right? No, not like that, like this, right? You want to see bears come in like we saw the bulls come in, right? The bulls came in and said, we're gone. See ya, right? You want to see that over here. And I know it's tough. I hate to miss that first pullback too, but remember, we don't optimize for number of trades. We optimize our strategy for the quality of trades, the reliability, right, of trades, the dependability of those trades, the consistency of those trades. This is not a very consistent place to get short yet. It just isn't. Once we see that 1, 2, 3 reversal, then we have a bear market. And now, don't chase it. I'm going to mark up that low. I'm going to mark up that high. And one of many different ways we can short off this high is to find that new channel. Now, let me be very specific on this. This is a 6,000 tick chart. When the market reverses like this, 1, 2, 3, I'm not going to look for entries off a 6,000 tick chart, right? Let's just face it. This is a slow time frame. It's ideal for putting the plan together. We're going to drill down to a faster time frame tomorrow in our trade room. And my two favorite kind of price action setups off those highs are bull traps and failures. Failures oftentimes lead to pullbacks, like we talked about earlier on the long side. Again, I'm not going to go over all the details of that. I'll cover all the right time frames, how to find the channel properly, and trigger the entry. I'll cover that, of course, again in that quick start class. So make sure you grab that in the upper right-hand corner. But that's how I'll trade the reversal. Now, there are a couple different variations of this. I'll talk more about those variations as we go deeper into the video, right? So make sure you stay tuned for more, and I'll talk about different ways we can trade that reversal, because there are a couple more reversal patterns that will also apply to this, right? So stay tuned for more on that. As we go higher here, right? As we go higher, we already talked about, right, that move up and that trap, right? Move up, shallow pullback, higher high in price, and that trap. That's kind of I wouldn't say easy one. It's a very easy setup, especially if we run higher. You could argue right now that's exactly what's going on right now, right? We're getting that trap below that low here. So that's going to be the easy one, right? As the market runs higher there with that trap. We may also see something like this, where it takes out that high, it pulls back to the moving average, and it jumps off the moving average. Now at that point, what is that? That's also a 1, 2, 3 breakout. I can also mark up that high. Again, mark up that low. Now drill down, right? Don't be foolish and just buy the candle off a 6,000 tick chart. The stop is too large on those slower time frames. We'll drill down to a faster time frame, and we'll look for that long, right, off the first pullback. Again, we're not, and I say pullback, right? The most common entry setups, and you'll see a lot of examples of those in the quick start class, is going to be that bear trap, right? Those failures and those pullback combinations, right? I don't mean to sound like a broken record, but welcome to trading, right? Once you figure out what works, you really don't have much incentive to make any changes to it, right? So we literally use the same recipe for success pretty much every day in our trade room. Obviously, there are variations because the markets are always different, but it's always the same basic principles, right? So it's one of the nice parts about being with me tomorrow morning in our trade room. I think the only thing to worry about right now is if we go sideways here, right? If we do start going sideways inside this range, not a lot changes. We're still looking for that buy, right, into that pullback, into that trap. So not a lot changes there if we do go sideways. I will say though, if they were to, let's say, for example, double top at that high, buyers try once, buyers try twice, there is going to be some potential reversals off of this high with what I call a 2-try reversal. Just remember though, you're gonna want to make sure at the very least you take out that high and then get buyers once, buyers twice, and then look for that trap, look for that channel off the high like that. There's a lot of variations of that two-try reversal, but that will be something to keep your eyes on, and you could also apply that to pretty much all the other markets, especially gold. We'll talk about gold here in a moment. So we'll definitely keep our eyes open on that as well. Pretty good looking setups here on the S&P. Just going to wait and see what we get here for tomorrow. Next up here, let's grab some Nasdaq, shall we? Nasdaq is a little bit, it's pretty much the same thing. It's very similar. It definitely is a little bit different in the sense that you can kind of see there's almost like a spike in channel here on this chart. Again, I almost laugh a little bit when I see this chart because you can tell it is a summertime market, right? Markets just don't usually fly like this and keep on grinding. I mean, this thing literally didn't have a trap. I don't think it had a trap all day today. I mean, the S&P was beautiful, lots of traps. You know, they weren't deep pullbacks, but you know, when you had the amount of strength we had today on the S&P, all you really needed were some trap entries, and we talk about traps here quite a bit already in this video. The Nasdaq didn't give you really anything, so I would imagine any pullback right now, I would love to get in down around this buy zone here. Those little dojis right there really create a nice area to be a buyer, but you know, long story short, we know we're bullish. It looks like a range. It smells like a range. We're definitely keeping an eye out for a range here. But, you know, let's face it, it definitely looks more like almost like a spike in channel right now. Again, none of these lows are even double bottoms. They're all higher lows right now. So it does look like this is a spike in channel. Spike in channels are really, really powerful clues because they pretty much tell us exactly what to do. This is also another interesting part here because if we keep going sideways inside this range, we oftentimes will run into a channel like this. I'll see if I can draw this channel out here. This channel, see, that channel is pretty interesting, right? Off that high, off that low, we oftentimes see pretty good trades when markets grind sideways and then jump right off the, the channel. So that is something on my radar for tomorrow, right? If we do start going sideways there, and obviously the same stuff I talked about right on the S&P. The buyers right now have all the control. They've got targets up overhead at 15,442. The sellers, if they can get their hooks in this thing, would love to go back and take out those prior all-time highs. The weekend gap, of course, is down there at 15,095. I cover a lot of the terminology, by the way, in that quick start class if you're watching here for the first time. So keep that in mind as well. A couple of things here. Let's kind of unpack this, if you will. Let's see here. A couple of things. Now, first of all, if we get the pullback, right? Let's assume right now the market is in a range. Let's assume just for illustration purposes, let's assume it's a range here right now. So we have the trading range, right? We know we have that level of support down underneath this. Honestly, I want to get underneath this range. I want to see bears come in, get them trying to get short, right, off the moving average, trade that failure, get that pullback, right, and then get that blast going higher. That's, again, I hate to sound like a broken record, but that's exactly what again, kind of those maybe three basic components are here: the failure, the pullback, and that trap, right? As we go higher. That seems to be pretty simple, pretty straightforward. Again, very similar to the S&P 500. If the market was to keep on grinding sideways, I mentioned earlier we have that channel here, okay? That channel, if we can get a trap below that low, that would really be a pretty darn good entry there. Now, it may happen overnight, so it may not be for everybody. It might be sleeping when it happens, right? But if we start going sideways here, if we can get that trap below that, 98 3/4 there, off the low of that channel, that'll be a great setup there. These are not the most reliable of entries just because, again, it may be in the middle of the night tonight, so you might want to go half size, quarter size, right? Something smaller than you normally go. But these are pretty consistent. These are pretty good. We saw a handful of those last week in our trade room. It's been one of my favorite setups here in this summertime season, so we'll definitely keep an eye out for that. I really do want that trap. That would really make my day, getting a trap below that 98 98 and 3/4 off that low. That would be fantastic. And again, I talk about traps right inside the quick start class. If the market turns and runs into a spiking channel, okay, this is where things get a little more interesting. It's honestly not that different though. If we spend the overnight session, right, chopping around inside a narrow channel, what does that tell us? Well, spiking channel, right? Spike up into a channel, and then we know, because it happens all the time, we know basically the base of that channel. Okay, so right where the spike runs into that channel base or the beginning of the channel, that typically is where this market is going to want to pull back. Now, oftentimes those pullbacks can be very, very strong. So what you want to think about is if we see a spike in channel, if we get that pullback, there's a couple things you want to keep in mind. One would be, again, kind of typical stuff, right? If it's a relatively decent pullback, I can grab that failure into that pullback combination, right? And then as we go higher, watch those traps. I know, same thing, but I tell you though, it works so well, right? So failure, pullback, trap set up, coming off that low. And again, I'm on a 4,000 tick chart right now. We'll drill down to a faster time frame. We'll apply it there. I talk about the time frames to use in the quick start class. If we really drop, right? If this thing starts to kind of push into that channel, and we really, you know what I mean? Like I said, I'd love to get down to this area, but if they go all the way down that area now, what's the problem? It's a really steep pullback. So at that point now, give the bears 2 tries, right? Let them try once, let them try twice. Once you do that, all those stops are hit. All those stops are just a sitting duck right there. We can now buy into those stop losses. There are quite a few different variations of this 2-try failure. I do cover those variations throughout the quick start class. I have lots of examples of this setup directly from our favorite markets in that quick start class. So make sure you grab that, and you'll see a lot of examples of that straight to your email box every morning. So that will be the 2-try theory. Now, a lot of times you're not going to get that pullback on these deep pullbacks. A lot of times when you have the bears all kind of roped in there, a lot of times you're not going to get that nice little pullback, right, and get that add-on. I love the pullback add-on, but again, when you go really get that big of a pullback, though, oftentimes this thing will rip. And when it rips, remember we saw it earlier, when it rips, what do? You find that shallow pullback and you buy that first trap. Okay, repeat after me. First trap is always the best trap. You don't want to miss that one. And honestly, you don't want to miss this one. This is the one you want. Right, that's the one you want. But oftentimes, though, when the market runs like that, it's moving so fast, it's so exciting to watch. You're like, oh my goodness, it can almost be difficult because you're staring at the chart, right? So to run like that, when that happens, just find those find those swings. I like to go out and grab a new channel, okay, off of those lows and buy those channel pullbacks or those traps off that very narrow channel. And again, I'm just simply illustrating what I'm looking for here tomorrow. I provide probably at this point more than a couple hundred examples of these on our favorite markets in that quick start class. You'll see more real examples of this stuff and the time frames we use and kind of how we apply it in the right direction. So now we get an idea there for the spike in channel. What if we keep going higher? Okay, and again, if we pull back, right? If we do get that deep pullback, if those bears can hold the pullback, okay, and jump, we get that 1, 2, 3. That 1, 2, 3 turns into a new channel, and again, we drill down to a faster time frame, like always, and we grab that first test. First test is always the best test. The second and third tests are nowhere near as reliable. I always tell my clients, you do whatever you can to get off that pullback. Okay, again, you can't trust the first one because it's too bullish, but once those bears can hold that sucker and run it, now you've got to get in on that pullback. The most important, or my favorite entries are traps, failures, pullback setups right off the high of that channel. Again, the bears would love to make that run here. What if the thing falls apart, right? What if it just falls apart? What if we, for example, what if we get a shallow pullback? The market holds the moving average, then just drops, right, and begins to run Because that could happen. I mean, hello, look left. Look what happened over there, right? It could easily happen again. You think a market that goes like this today couldn't go right back down tomorrow? Of course it could. So if the market really starts to race going lower overnight, okay, what you want to look for are those two trap patterns, because you're going to get a lot of that big strong momentum, shallow pullback, lower low. Traps are going to be your bread and butter as the market takes off. Again, if it really starts to accelerate going lower. Now, channels would be great. It'd be great to have a channel on there and something to tie that channel, but sometimes you don't get the channel. Sometimes it's literally the bottom falls out of it, and any trap high is what you've got to jump in on. Those can be tricky because it's kind of scary to chase it like that, but you know where they're trying to go at that point. Trying to go back down to that 172.5, right? That prior all-time high. So we know how to trade this thing if it turns. If it goes higher, keep an eye out for that 1, 2, 3 breakout. You don't need to use this big channel. Okay, this big channel is something just there out of speculation right now. It kind of gives an idea of how to trade this thing if it goes sideways and then goes. Remember like that earlier? If we do see it go up, take out that high. If we get that strong jump off the moving average, 1, 2, 3 breakout, I'm then going to, of course, if we can get that 1, 2, 3 breakout, I'm going to mark up that high, mark up that low, and as always, right, drill down to a faster time frame, find those traps, find those failures, find those pullback combinations off of that low. If it really jumps and runs higher, that's exactly when you look for those traps. Okay, so it really runs and jumps and runs higher here. Strong push up, shallow pullback, higher high price. Everybody wants that trap. Everybody wants that trap. It's a pretty easy trade. One of my favorites. Again, if you can find a channel, extra bonus points for you. Channels are not going to be 100% required if you have enough strength. How much is enough strength? Well, we'll have to wait and see what it looks like tomorrow in our trade room. There's a lot of nuance in the financial markets. I'm covering the basics right now, but let's face it, there's a lot of variation. There's a lot of gray area. It takes experience to kind of know what's strong, what's not strong. I cover, again, a lot of the details of how I use the moving average, right, determine strength. I cover that stuff in the quick start class, but you really got to be there with me to kind of watch this stuff unfold, and that'll give you a best idea here of whether it's strong or not. But we'll fill in the blanks on that tomorrow. At least now you get the good ideas, or at least a basic idea here of how I want to trade this Nasdaq, whether we go up, down, or sideways. And I'm actually quite curious right now to see if this thing's going to go sideways here and get into that channel and pop. We saw a bunch of those last week, so I wouldn't be surprised if we get that for tomorrow. That 42, of course. You got 42, and then there was one more, right? Yeah, 639 all the way up there. That seems a bit much for tomorrow. Just remember, guys, whenever we see a big move in one day, okay, oftentimes we see a range the following day. So the idea of getting another big move higher tomorrow, is it impossible? Certainly not. Is it improbable? Yeah, it's not very likely. What is more likely is chop around, get a nice deep pullback, retest the high, or right, chop around, pull back, and reverse and retest those lows. Another significant leg higher is unlikely. But come on, right? Again, summertime trading, anything is possible. So I definitely will. I will never say never. I will never say never. I will always say, as professional traders, our job is to take whatever the market gives us. Hopefully it does. Hopefully it does give us another big leg going higher tomorrow, right? Keep the party going. Over in the gold here now, wrapping things up here on the yellow metal. Gold had a gorgeous breakout into a trap to start the session off today. As I always remind you guys, start your day on the gold. Gold is an early morning mover. You really can't trust much on gold later in the day, so just be aware of that. What's happening on gold right now? Gold is kind of mid-pendulum swing. There are a couple different components on this chart. The most important component, of course, is the overall bullish trend. There is our range. Ranges, of course, are balanced markets. So once the market swings below the range, we should see that pendulum swing back in the opposite direction. Now you could definitely tell buyers were waiting to get in on that pullback on gold today. I would imagine buyers on the S&P and the Nasdaq might have that same attitude tomorrow as well. We'll see what happens overnight. The world is pretty volatile right now between the Delta variant and Afghanistan and you name it, right? Lots of different things going on here right now. So there might be some changes here overnight, and we may see gold react to it. It's a bull market into a trading range. Right now, I think the only variable right now is what happens if we don't keep going higher, because the buyers got their pullback. You already know my plan, right? We get the pullback, they fail, and they want to run higher here. That's pretty much the same thing we're looking for here right now. The big question right now is not whether or not we punch and go higher, because that's assumed. At this point, we are assuming this market will run up, will give us that shallow pullback, okay, that higher high, and that trap. We assume that is coming here right now because of all of this bullish momentum. The targets, of course, up overhead. 1835 half. 1835 half is a nice, juicy target. Again, the pendulum swing will be there, but the pendulum swing, though, has potential to be a paper napkin with a market running like we saw today. We'll see. We'll see. But again, if the market runs higher here and really blasts right through that pendulum swing, or really for the most part, doesn't need to really blast that much, just a strong jump up through the pendulum swing, shallow pullback, higher high. You know exactly where buyers are waiting here for tomorrow. And keep in mind, right, this is obviously not being drawn to scale. I'm just simply kind of illustrating some setups I'm looking for here as we go. We may also see the market too go up, hold that pendulum, pull back to the moving average, and then jump off the moving average. Mark up that high, mark up that low, drill down to your faster time frame, grab the entry off that low. No, we're not going to the 1500 tick chart. Okay, that would be a bit crazy on the gold, right? We'll drill it down. We'll find our traps, our failures, our pullbacks, our strength continuations coming off of that low. Again, you'll learn those price action entries in that quick start class. Again, the big question I have right now is what if we go lower? Because if we go lower here, something's wrong. Something is wrong. We should be completing that pendulum swing. So what's the plan if we go lower here? The plan if we go lower is actually pretty straightforward. I've got that trend line down here. Okay, this whole area down here really is ideal. I think this is a great spot, though. Get that prior high. Okay, prior high. Got that kind of trend line coming down. That would be a great spot to get long. Let me get rid of this channel here for a moment. Now, if we go lower, okay, and again, if we trade sideways here, you know what to do, right? Sit on hands, wait for the pullback, and then we'll execute this plan here if we do go sideways here. So if we do pull back here, whether or not we go sideways in the meantime or not, if we pull back, get underneath, really ideally, I'd like to get down underneath that low, taking that area there. Remember, let the bears try twice at that point. Let them try once, let them try twice. Let's talk about some of the variations of this, because there are quite a few variations that we could use on this. So if we do pull back, let's say we go all the way down into that trend line here. Now what you want to do is give the bears the benefit of the doubt. They were obviously strong enough to prevent that pendulum swing. So we should respect them at that point. I know we're still very bullish, but remember, that's a big failed rotation at that point. So at that point now, you want to give the bears the benefit of the doubt, make them prove it to us here. 1 try for the bears, 2 try for the bears. Now, I talked about this earlier. One of the variations, which I love, is always a trap. You know, if you've learned one thing from me in this video, you can see I love traps. Traps are really my favorite trade because it gets you into that rock bottom price when you're buying or that nice high price when you're selling. It also, like the name describes, traps in the other side of the market. You've got bears trying twice there, traps them in, a nice strong signal candle, and we're going back up into that range because, again, remember, ranges act like magnets, okay? So we're going to go back up into that trading range. Now, another technique I like to use, we may not get that trap. Sometimes what happens is we get something like this, and you'll draw the trend line across the highs, bring it down off that low, and that is also a fantastic entry. See, now that is not a trap. But you see how I draw that? It's like a hidden channel. You draw the channel off the highs, you bring it down off that low, okay, the major low, and grab it off of that new channel. And I'll tell you, if I can get a trap on that as well, I mean, come on, right? If we get a trap and a channel there, man, just take it. Right? If you're worried about whatever, take it half size, whatever. That's a great setup. Get some skin in the game on a setup like that. That is definitely something that I'm watching for here as we go. And remember, if at any point those bears can hold that pullback and jump, giddy up, right? Mark that low, mark that high, and now we're looking for that short. Again, drill down to a faster time frame. Okay, drill down to a faster time frame for those traps. Failures, pullback setups, that weekend gap makes for an easy target. That is last Friday's close, right? Last Friday's close is the weekend gap, okay? So keep that in mind as we go off the high of that channel. What if we get a shallow pullback, okay? What if the market pulls back shallow? Let's say, for example, we go up, we retest the high, we pull back, because hey, maybe something does happen. The market wants to keep going high, but it's not quite ready yet. Two-try trap, right? Two-try trap. So bears once, bears twice, trap low. Now, why would I look for a trap on that scenario? Because you're buying right into those, well, not right into the highs, right? But you're buying in a relatively high spot. That trap will be your best bet. And again, unless we're going higher here, you really got to be suspicious. This thing wants to go all the way back down and then come back up. So give those bears a couple digs of the shovel, let them dig their own grave, and then hit them right where it hurts. You know what I mean? Find that nice signal candle and buy right into the stop loss. You know exactly where they want to take this price going higher. So I think at this point, we got it all covered, right? We talked about the breakout going higher. We know the buyers want to get to. I know it's a little bit unrealistic at 35.5. So we'll know more tomorrow. Once we see the couple hours overnight, we'll know where the big targets will be for tomorrow. So we'll update you guys tomorrow morning in the trade room. If we pull back, remember, use the two-try rule, the two-try failure. If the pullback turns into the reversal, you got it, right? You know what to do here. And also, too, I mentioned earlier this reversal. We may see, like, for example, let's say they take the market higher, they get the pendulum swing. And then instead of a shallow pullback and a higher high now, which of course will be a trap, right? A trap entry there. Instead of that higher price, now the buyers come in. They try once, they can't keep it going, they try twice. You see where I'm going with this now, okay? Mark that low, mark that high, there's your short. See that? One try, two try, or maybe we get really lucky, get that trap off of that high and then run back down. What I'll do is I'll take that trap off the high and then find that new channel right here. And there'll almost always be some sort of like trap off, you know what I mean? Some trap, some failure. Again, you'll see a lot of examples of these in the quick start class. Trap, failure, pullback, as we try to finish off the pendulum swing. As I mentioned earlier, you're trying to trade the rotation. Buy it low as it rotates. If it rotates back down again, where does it want to go? It wants to go back to rotate back and forth like that, okay? And again, I apologize. I'm kind of scribbling in the chart right now. But tomorrow morning, every morning, we're going to do this stuff together. If you're not with me in the trade room, you'll see a lot of examples of our favorite setups in that quick start class. So grab that link in the upper right-hand corner and pretty good plan for tomorrow. Now, I'm sure there's probably something the market will do we didn't expect. The markets love to throw us curveballs, especially in the month of August. So we'll see how things go tomorrow. Remember, though, our job is trade whatever these markets give us, right? We can't predict the future. All we control is how we execute. We're going to execute together tomorrow morning in our trade room. I would love to have you there, right there with me. I'll put all the membership links you guys need. I'll put all that in the description of this YouTube video. So grab the links, get registered. I'll see you tomorrow morning. Don't be afraid to call the office. I will be more than happy to walk you through the entire process. We have a bunch of different membership options right now, some bonuses as we go into the Labor Day weekend. So check out the website for more details on that. Drop those questions if you got them. I hope by now you subscribe to our YouTube channel because I'm coming here full throttle all week this week. Hopefully you'll be here all week this week. I'm sorry to leave you guys hanging on Thursday evening last week. I really apologize about that, but life happened. Life happens sometimes. So we're back to a full schedule for this week. Hope you guys enjoyed the video tonight. Again, I'll see you tomorrow morning, 8 o'clock Eastern time. If not, you better come back and see me tomorrow night. We'll do it all again and get ready for Wednesday's trading session. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.